This is our Forex blog for October 3rd, 2012. This is going to be a little bit different than past blog videos because I'm spending all my time right now working on and improving our FX trading signals. This is the FX Trend Pro currency meter that we haven't really used in classes for a while. It's not quite as good as our real-time only, live build your own trend indicator. I brought this up a couple hours ago. And you can see there's only been 2 bars. So, in my work to improve the signal, sometimes, I can't leave the software running just to do a blog video. We have hundreds of other blog videos you can watch to see, a more superior method than our FX Trend Pro currency meter. But it's a very similar concept. It shows the real-time trend up here, daily, weekly, and monthly underneath that. And then underneath that I have older daily, weekly, monthly tools, which only work live, and they're very similar to the other ones, which can show past data. This is more of a test workspace that I use sometimes to compare and improve the pivot score daily, weekly, monthly. But the key to our trading method, whether you use our older tools or new ones, is simply to look for strength in one currency, and especially when it matches the daily, weekly, and monthly trend, you want to buy that currency versus one that's weak. And most of the time we're anticipating trends. For instance, you don't want to just wait for this after about 20 minutes here to go plus 80. You want to see some strength, and then during the pullback you want to see less weakness and for less amount of time than the previous strength. So here you have about 2 hours of strength, about an hour and a half of weakness. You could start looking for the previous trend to continue, but it gets weaker. And then right here, it gets, the weakness falls off, and then you can assume the longer term trend's going to. You don't wait for 9 o'clock here for the euro to be super strong. You're looking for the pullbacks after half an hour to an hour and a half to 3 hours of pullback. You're anticipating the trend to come back by just simply waiting for that weakness to slow down. So like, for instance, a good time to look for a buy would be, let's say, 805 in the euro. It had some strength. The daily, weekly, monthly trends up. It had about an hour and a half of weakness, a little bit of strength, a little weakness again. Or you could also, at this point right here, 720, look for a buy in the euro against the weakest one. Now, the dollar was strong today. The yen was relatively weak. Let's look at this at 805. At 805, the yen has already been weak for an hour. I would prefer to have incredible weakness before and then have gone up very lightly for a half an hour and a half. Unfortunately, this has already been going down for about 40 minutes, so you may not get a continuation trade here. But let's look at the euro versus the yen at 805. Here's 805, right? So you can see it's already pulled back from its high. It came down to the hourly moving average, 20-day moving average, and found support. And coming up to 8 o'clock, it also had a little bit of a pullback right here. So whether you got into it there, this is 812. This bar right here starts at 809. This is the 756 to 809. So basically, at 805, these are range bars, so they don't have perfect start and stop times. Somewhere around 805 was right here. The currency had been trending up, pulled back, found support at a key area, not once, but twice, started to go back up again. You look to buy here, and most of the time it's going to work its way up to the fib target of the last wave, which is right here. And it came real close to that, went about 2 pips away from that fib level, and you're always trailing your stop when you get into a trade. And so you'd be long somewhere around 04, probably get out of this once it breaks that bar's low up there at 24, and you made 20 pips while risking less than 10. And that's really the key to trading. You don't, and it's probably my fault for not being more clear on how to use the currency meter, but after doing blog videos each day showing it in action, I felt people got the gist of how to use it. You don't wait for it already to be strong before you buy. You're anticipating future trend direction by looking at what happened in the past. If you had a lot of strength like the euro did, and then the weakness for half an hour to hour and a half comes in, you're anticipating that previous strength to resume, especially when it's in the direction of the daily, weekly, monthly trend. Let's look at an example on the weak side. The yen, weak here. 15 minutes of strength. You're anticipating that weakness to come back because the daily trend's up, but the weekly trend's down. The monthly trend's just barely up, right? And later in the day, around 10, pretty much all the time frames are down. You had about an hour and a half of weakness here, about 30 minutes of very mediocre strength, and that strength is lessening, right? So 9:55 right here, you're anticipating the previous downtrend to resume. And in fact, even a little bit earlier than that, maybe after at least 15 minutes of weakness, 9:45, you're starting to look for a strong currency to buy against a weak yen, right? So what's strong at 9:30? Well, the euro is strong at 9:30. The dollar was quite strong before, and it's actually pulling back. It has the exact opposite pattern of the yen. Lots of strength, daily, weekly, monthly trends up, a little bit of weakness, and that weakness is getting less and less and less. So 9:30 right here, I would say buying the dollar, which has previously been strong, is undergoing a little bit of a pullback with very little weakness. The dollar yen coming up to 9:30 is a good one to be looking to buy. It's that simple. Now, this is not one, I personally don't trade the dollar yen that much because a lot of times the dollar and yen are moving in the same direction, and they're also, it has low volatility. But let's take a look at this coming up to 9:30 here. So here's 9:30, it had a pullback, right? And let's put on a 4 pips per bar chart. And in fact, this doesn't move that much, so we'll go down to 3 pips per bar chart, 9:30, somewhere around here. There's really not much of a pullback at all. Get in this trade, and here's the previous wave up. It's probably going to work its way up to the first or second fib target, and you can see it did. It goes up about 8 or 9 pips, stalls out here. If you bought this next pullback, it goes up another 8 or 9 pips. And basically, that's how you use the currency meter correctly. It's how I use the currency meter. It's how and why I create the currency meter. You don't just wait for a currency that was strong before, let's say the dollar here, to go super strong, like, okay, right here. This is 840. Which one is super weak at 840? Well, you can see the yen, or the euro, is very weak here at 840. But earlier, it had a lot of strength. The daily, weekly, monthly trends up. You don't want to buy, two currencies against each other that both have daily, weekly, monthly trends up. You want to buy one currency that's strong on all longer time frames against one that's weak, like maybe the Australian, right? That's how you want to use, the currency meter. But let's take a look at 840 here, buying selling the euro dollar at 840. Here is 840, right? So if you got short right here, guess what? It went down a few pips, and then it reversed because you're getting into it at a very low probability place, and that's not how I use a currency meter, and it's not how I want anyone to use a currency meter, because as people have been telling me in the last 2 weeks, they're having problems with the currency meter, and I've narrowed it down to what they're doing by using the currency meter and getting in when a currency one goes really strong, the other one goes very weak. You're missing the whole point of the currency meter. The whole point of the currency meter is to anticipate future trend direction. For instance, the daily, weekly, monthly trend of the Australian's down, but it had a little bit of strength earlier today. At 1 o'clock, it has some weakness, right? Intense weakness. And then during the pullback phase, it has very little strength. This previous momentum to the downside with a lot of intensity in the direction of the daily, weekly, monthly trend is what you're basically anticipating. You're looking for that weakness to resume, and so after about 15 to 35 minutes, or I prefer an hour, a pullback, let's say right here around 2:30, we're looking for to sell the Australian against one that has the exact opposite pattern. Previous strength, it's undergoing a little bit of weakness during its pullback phase, and you're anticipating that previous strength resuming. So the Swiss was strong. Let's scroll the euro over here. We're looking this again at around 4:30. This one has the exact opposite pattern. Lots of strength, a little bit of weakness, right? 14.45. Let's look at buying the euro against the Australian at 2:30 to 3. and we'll go back up to a 5 pips per bar chart. So here's the 230 time frame. It got a pullback, right? And we're anticipating a trend direction and resumption of the previous trend. So basically, buying the pullback. This is a currency that obviously is not moving too many pips today. From this area here, it only went up 18 pips. But you can see, unlike the previous example, you're buying this at a discount, at a pullback. The trend's up, you're buying at a pullback, and you can see when it breaks out here, it does at least go your way enough to make some money. It goes from 38 all the way to 50. It goes up 12 pips. That is why we use the currency meter. Now, let's scroll back in the CAD. You can see most of the time frames are down, right? Lots of weakness. A little bit of strength here for about an hour. One bar of a lot of intensity, then the next bar falls away at 4:15. It's safe to assume and anticipate that the CAD's going to go weak again, right? So which one, let's say at 4:15 right here, was strong? Well, the dollar was very strong, and then had a little bit of weakness. You could anticipate, as you can see, 4:10, 4:15 right here, that weakness is going down. A lot of times it goes down before the strength comes back. You could look to buy the dollar CAD around 4:15. So let's bring up the dollar CAD chart and look at this chart around 4:15. That's right here. Notice the trend is up. You have a pullback. I like 3 to 5 bar pullbacks. In other words, 1 bar down, 2 bars down, 3 bars down, 1 bar up. You buy when it goes 1 pip above that bar's high. And so you get into this trade around 61, and it goes up to 76. You made 15 pips, and you're risking only 5 pips because that's what this is, a 5 pips per bar plus 1 pip padding plus the spread. So your risk in this is 8 or 9 pips max, and you made 15 pips. That's over 1.5 times bigger profit than what your risk is. In this, and only this way of using the currency meter is how you should trade. Don't wait for a currency to already show extreme strength and another one to show extreme weakness. What you want to do is look at what previously happened and wait for a pullback. In other words, lots of strength right here, half an hour of weakness right here. At midnight, because the daily, weekly, monthly trend are up, it's safe to assume that the previous trend's going to continue. Again, half an hour to an hour is good. Here's half an hour, half an hour. This one took about an hour. That one didn't resume its uptrend for more than about 30 minutes, but it's more than enough to break even or make 5 to 15 pips. Then you have another hour, and it's safe to assume the strength will resume, and it does. And that's how the markets go. They go up, down, up, down, up, down. You want to time it. Find a strong currency, a little bit of weakness. This is a perfect pattern right here. Lots of momentum to the upside, previous momentum to the upside, daily, weekly, monthly trends out. Very little weakness at midnight. Which one was one of the weakest? You can see the Australian, lots of weakness. Coming up to midnight, it had a little bit of strength, right? All right, you see that? So let's look for Australian dollar sells at midnight. I mean, it doesn't get any easier than this. So here's, midnight right here. Now this one's not much of a pullback. Again, I like a 3 to 5 bar pullback, and this is only a 2 bar. But guess what? Even if you took this trade, it did go a little bit your way, then it came back up. You might have got out of this trade at break even, or if you held a little bit longer, short at 20, it did go down to 0.2. It fell 18 pips. Whether you made 5 pips or got out at break even, shorted again, and made 10 pips, regardless, this one continued in the anticipated trend direction. And that's the whole purpose of the currency meter. Now, what I'm working on 100% of my time right now is improving the FX trade signals to showcase much higher probability of winning trades. Before, my intention was to put every pattern on here that is a potential buy or sell signal and let traders decide based on the real-time momentum tools where support resistance is to whether to take the trades or not. And unfortunately, what I realize is a lot of traders don't know support resistance, Fibonacci, trend lines, how the point of control value areas work, previous days, weeks, and months, high and low, pattern, chart pattern, all the stuff that I use to trade with these signals, they don't know. And, we're basically losing money by taking every single trade and not just the cherry picking the best ones. Like, here's a weak one. You have some sell signals right here. Here's basically how I would do it. Pretty much draw a trend line underneath there. When that trend line gets broken, after having one or two sell signals, I go short and it falls and it pulls back. Here's another decent pullback, right? Short somewhere around here. This one just kind of goes sideways, and I don't have the real-time momentum on here. Once you're in a trade, if the weakness resumes and you have a lot of weakness, you stay with the trade. If it comes down and there's not much weakness, you get out. Whether it's break even, 5 pips, 10 pips, some cases. You take what you can get. Some are going to be nice, beautiful 25 to 80 pip moves, and other ones are going to be, very disappointing 3 to 5 pip profits, but they add up, especially over a course of a week to a few months. So take what the market gives you. Some days are going to be very choppy sideways action, very low number of pips movement. From the high up here at 30 to the low, this thing's pretty much moved 30 pips. So, to be able to take out 5 pips here, 15 pips here, and maybe make 20 pips out of a currency that's only moved 30 pips from high to low for the day, that's pretty amazing. And that's what, pretty much our methods by anticipating the currency meter are designed to do.